Today I'm going to talk to you about ledger accounts. In the previous tutorial I talked to you about items in the balance sheet. Every item in the balance sheet is represented by an account. For example, the furniture account is one such item. Let's have a look at how it actually looks. Here we have a T. We've got a heading of every account. On the left hand side all the debit entries go, and on the right hand side you've got all credit entries. Now what we need to do is to learn what goes where when. Let's look at this particular table. It's a good summary to start off with. I'll take you through a illustrative example later. But here assets by their nature are debits when you increase them, okay, and when we want to decrease an asset we put them on the credit side, so on this side. You can see that we're still using the accounting equation, and later on when we see ledger accounts in action you'll see how the double entry bookkeeping system with debits and credits actually work. But to start with we need to work out what the actual rules are. Liability and owner's equity are credit in nature, and any increases get put on the credit side and any decreases to these accounts get put on the debit side. Now here's another way of looking at the same information. So if we have an asset and it goes up we put it on the debit side, if it goes down it goes on the credit side. For liabilities and owner's equity, as you can see here, we debit this time for decrease, we credit for an increase, and you can see the arrows there. Pause it if you need to and have another look at that. Now so far I've only talked to you about assets, liabilities and owner's equity, but importantly the items that go in the income statement, the revenues and expenses, also have an impact on equity, as you can see. So anything that increases owner's equity, right, would be normally a revenue. So if we sell something or if we offer a service, so in this instance the rule is that any revenue, it's on the credit side, and any expense that we have is on the debit side. There's a lot to take in, but I'm going to obviously talk you through how they operate using a spreadsheet in a moment. Now this spreadsheet is going to come from your text in page 31. Now here's my spreadsheet that I've got with information basically from page 31. The cash at bank account, and I've got S. Paul, who is a creditor who I'll show you in a moment, who owes us money. So in the first instance, cash at bank, every account has got the debit side and the credit side, but it's represented by the date, the particulars and the amount on either side, so we can track what transactions occurred and what it relates to. That's really important. Let's take one transaction for example. Let's say that we received $1,000 worth of cash. Let's go through the rules. It's an asset. It's increased to the cash at bank, which is an asset. Therefore, it should be on the debit side. Okay. So let's say it's on the 1st of the 1st, 2014. Oops, I didn't put that in properly. Let's say it was introduced by the owner, so it's capital, $1,000. So there's one entry that we make. So you can see that on the 1st of the 1st, 2014, we introduced $1,000 worth of cash into the business that went to the cash at bank account. All right. Let me make another assumption. The second transaction, let's assume that on the 5th of the 1st, 2014, we spent some money. Buying some equipment, right? So that in this instance will make the cash at bank account go down. Well, it's obvious as you'll see in a moment, but it is a asset. But when it goes down, it appears on the credit side, which is on this side here. Let's assume that we bought some equipment. There we are, and let's assume we paid $400 for it. There we are. All right. So we've got a debit entry, which has increased the cash at bank account, and we've got a credit entry here, which has decreased the cash at bank account. Let me give you another example with S pool. Let's say, for argument's sake, on the 6th of the January 2014, we purchased some money from S pool. We purchased some inventories. Let's write that in, from S pool for, say, what does it say in a book? Oh, here we go, $1,000. Okay, to say we purchased that from them, but we haven't paid for it yet. We're going to pay for it in a little while. But let's just follow through the rules. S pool is a liability. Okay, so it's a liability account. So by its nature, any increases to a liability account would appear on the credit side, as you've seen me put that in. All right. Now let's assume that we come to the end of the month, the 31st, and that we have paid off pool, this debt to pool, and let's assume that in this instance we're going to pay half of it. All right. So S pool is a liability. If we're going to decrease the liability account, it appears on the debit side as per our rule. Let's just say we pay $500 here. All right. In this instance, we have obviously paid this money, so it's come out of our cash at bank account. You may be now wondering where the other half of this transaction is going to appear, and this is a first-hand experience, illustration, if you like, how the double entry bookkeeping system works. So we had a debit over here. Now I've told you that the cash at bank account was used to pay S pool $500, but when we go to the cash at bank account, we want to also record this transaction. So let's just go through the rules. $500 came out of the bank account. It is a decrease to an asset, which means it's a credit, so it must appear on the credit side. So here we have this occurring. The cross-reference is S pool for $500. All right. So you can see how a double entry has actually worked, and I will follow up on this later, but for every financial transaction that occurs, there's at least one debit entry and one credit entry, as you saw with this last one. All right, and that's important. But just to reiterate, an entry to an asset account like cash at bank, if it's a decrease, credit side; increase, debit side. For liability, or known as equity for that matter, an increase is on the credit side and a decrease is on the debit side. So let's go back to the table to summarize that information. So here's the summary. For assets, if we want to increase, it's debit; decrease for credit. Liabilities known as equity. We have, if we want to increase, on the credit side, and we want to decrease these accounts there on the debit side. And here's the other table that we looked at, and underneath here we've got the normal types of transactions. So it's normal for an asset to be on the, normally when we have a transaction that occurs, it's normally on the debit side. For liabilities known as equity on the credit side. For revenue and for expenses, you can see what is normal there as well. Hopefully that's been useful to you. This is going to be reinforced in future tutorials, but for now hopefully that will have explained the need for ledger account, where the debits and credits go, and how it starts to operate in the double entry bookkeeping system. Thanks for listening.